All right, I'm going to talk about position sizing in this video, but it's going to be geared to kind of an intermediate level investor who already is conversant in setting rules for starting position sizes and setting rules for trimming back a stock when it gets above a certain position limit that you might set for a portfolio. So if you think about, say, like a $100,000 portfolio, you might populate it with 10 stocks. Let's just, to keep it simple, 10 stocks of $10,000 each, and that they're diversified across sectors, and then the position size is appropriate across these 10 stocks. They're all the same, right? Now, over time, of course, you don't know what the return of a stock will be until the future, right? Those returns are unknown until afterwards. And you're going to have a distribution of returns across any 10 stocks, any portfolio stocks. Some will go down, some will go down a lot, some will just sit there, some will go up, and then some will go up a lot, right? You're going to have this spectrum of returns. You may have one or two stocks that go up significantly more than all the others. And you could even imagine, in any 5-year or 7-year period, you could have a 10-bagger. Some stock you're very lucky with, you picked at a very good point in time, and the company did very, very well. And so you could have a $10,000 position that grows to $100,000. And okay, in most cases, the conventional wisdom tells you you have to trim that stock back because the fact that it's a 10xer, it's so much bigger than your other positions, and you're exposed to that stock and the risk that it may go back down, right? And then also it is sort of sensible to trim back some winnings when you have such a big move in a company. Okay, and again, that's conventional wisdom. The nuance I want to talk about is the portfolio size may drive you to decide to relax these rules. So, for example, if you're in capital accumulation, the capital accumulation phase of your life, where you're earning good money and you're very aggressively saving new capital, pumping new capital into this investment account, this 10-bagger, the stock that went from $10,000 to $100,000, may not be as disproportionately large a holding in a portfolio where you're also adding a lot of capital per year. So maybe imagine that you're adding $50,000 a year to this portfolio. It's 7 years from now. This total portfolio could be worth maybe $600,000 or $700,000 or even more. If you're in a bull market and you're saving and putting a lot of fresh capital into the portfolio, you have some stocks that do very, very well. You might actually have, say, a $600,000, $700,000, $800,000 portfolio, and all of a sudden this 10-bagger stock that went from $10,000 to $100,000, it's not as disproportionately large relative to the denominator of the whole portfolio. Now, the reverse can be true if you're in spend down phase. If you're retired and you're removing, say, 3 or 4% of your portfolio per year for spending, you may have a portfolio that's sort of a stable value or gradually declining in value even, and then this 10-bagger position is even more disproportionate than it would have been if the portfolio position or portfolio value overall was flat. So this is kind of another nuance. You want to think about what phase of life you're in, and you want to think about your portfolio sizing rules, your position sizing rules in context of a likely future value of your portfolio, which again will be unknown, right? But it's meaningfully likely that your portfolio could be larger than you expect, and so you may actually not want to trim back a stock that's moved up a lot, or you may trim it back less than you otherwise would, given your sizing rules, because the denominator of the portfolio has grown over time, will grow over time, okay? So again, it's a nuance, and with all rules, there's exceptions, right? And so you have to sort of set some general position sizing rules, some diversification rules, but you also have to live with some uncertainty and flexibility with those rules so that you can adjust to changing circumstances. And when it comes to position sizing, you want to think about a position size relative to your future portfolio value, okay? That's the nuance I want to convey. Thanks for watching.